We've all been there. You decide to invest for an early retirement. Go to YouTube to get some inspiration. See that you would need $1 million to live off dividends like a successful YouTubers. Think that you are going to have that kind of money in like never, and say to yourself, man, I'd rather be a stripper, just to subsequently realize that there will be no one willing to pay to see you naked. Then you give up on dream of being financially independent, go on with your life, and some months later, the dream of having income without having to move a finger starts to haunt you back. You shake off early despair and grab a calculator and start crunching the numbers. After limiting all your spending and cutting on the food expenses to just $2 a day, getting a second job, you start saving fast, though your mental state can be described as a neurotic monk. You hate your current life, but you're making progress to financial independence. A few months later, you've saved $10,000, and now is your big day. You're going to invest your $10K. Quick research brings you to reliable dividend stocks called Dividend Aristocrats. You pick one with long track record of dividend payouts, dividend growth over the years of neat 7.5%, and stock price growth in double digits. The stock has it all. In the end, it is a true aristocrat, the caterpillar. You put the money in, finally get some rest on your couch before you head on with the evening job at a local grocery store. But wait, you grab the calculator again. This time, you're summing up your earnings. All that effort is going to return $50 each quarter. That is less than $17 a month. You've sacrificed all your time, all the pleasures, and all the good food to make a little less than $17 a month? You may start laughing, crying, swearing, but it's not going to change a thing. You're reconsidering all of your decisions and weighing whether it will be worth to go on with your second job in an hour or buy a bucket of ice cream and eat it whole tonight. Sure, the stock price is likely to go up, so does the dividend payment, but with such a small payout, you're looking at years, if not tens of years, in future to have this investment make a difference, where you could have bought yourself a pretty decent car instead. But it isn't like all the dividend aristocrats are the same, right? Well, with dividend yield of around 2%, it is a golden standard. See for yourself. McDonald's, 2%. Walmart, 1.5%. J&J, 2.5%. Coca-Cola, incredible 3%. Before giving up again, you go through all the stocks in the Dividend Aristocrat list. I did so too. And then you find it. AT&T. Man, you start to rejoice. A dividend yield of 7.42%. You'd be looking at $185 a quarter or $62 a month. This feels better. It's far from perfect. But hey, $62 a month is not bad at all, as it would return $740 a year. Okay, you'll accept that the path to freedom is going to be longer. Just one last thing. You look at the long-term performance of the stock. 5 years, and the stock lost 32%. You're left speechless, glaring at the screen, asking yourself why you even bother to think of this and waste your time on the whole early retirement thing. Okay, that was bleak, but it doesn't have to be like that, and I'll tell you how to fix it. There are stocks, or rather assets, that hold value or grow while providing high dividend yield. And I'm not talking about any fishy derivatives that brought out about the financial crisis of 2008. Okay, some of them are fishy, such as the ETF focused on variability of USO called USOI, which pays around 30% yearly dividend. But it is an extremely high-risk investment. So what are the options you would have? Well, I already mentioned ETFs. They lump together stocks from various industries, and by mixing them well, they are often able to provide a neat growth in share price with dividend yields exceeding 5 or even 8%. Just look at GEPI, XYLD, with extremes of over 10% in few months with very volatile ETFs such as QYLD. You may want to consider investing in REITs, master limited partnerships, or some unconventional stocks, of which my favorites are business development companies, BDCs. Unlike regular companies that sell goods or services, these provide financing to smaller companies to help them, as you may have figured out, develop their business and grow. These small companies return part of their profit to BDCs, and the law demands BDCs to pay 90% of this revenue back to shareholders as dividends. Few of these companies offer dividend yields over 9% a year. The biggest one in the area is Ares Capital Corporation. This company provides both high dividend yield and stability and slow growth. Other BDCs may be worth the research, yet note that they may be more volatile or risky of an investment. The trade-off is that these stocks usually don't enjoy staggering growth and high dividend payout at the same time. But hey, 30% in 5 years with that level of dividend is still nice. If you invested those hypothetical $10,000 into Ares Capital, then you would be enjoying over $200 each quarter or approximately $70 a month, which is still way better than the Caterpillar's $17. Another option for you would be to invest into real estate investment trusts, or REITs for short. REITs are required by law to distribute 90% of their income from tenants back to shareholders. The best known out there is Realty Income Corporation. Although with lower dividend yield, this company provides dividends monthly, and so far they did that uninterrupted for over 600 months. Since its public listing in 1994, Realty Income increased the dividend 109 times. And although you may look at this share through your fingers as the dividend yield is rather low compared to previously mentioned BDCs, I would advise you not to do that. And that would be because once you are able to reinvest your dividend with every month's payout, the snowball effect will help you grow your portfolio further. I know these won't allow you to retire tomorrow, but dividend growth coupled with high dividend income will in time move you towards that much desired financial freedom. So put a bucket of ice cream back to the freezer and get back to work on your future. And before you leave, check out the rest of the videos on my channel. They are targeted to most common troubles in investing and should help you to reach your goals faster. Thank you very much for watching.